So, hello everyone, and welcome to yet another episode. And let's continue the series of the trading psychology that we have been discussing so far, so good. And the reason why this really matters is because you need to understand that the bigger chunk of trading, it's all about the trading psychology. That is, they say that 60% of trading is psychology, but for me, I usually say that 80% of trading is psychology. So, but again, of course, you cannot rule out the structure, which is about 20%. If you understand the structure, of course, it begins by understanding the structure, which now you transition now to managing the trading psychology. And with those two at par, at least it helps you increase your trading, your winning probabilities. So, welcome. This is the Coast Edition, doing this from the coast. Today is on Mazingira Day. It's a holiday. Decided to take some time off and at least unwind, right? And to refresh yourself, because it's very important. Sometimes, trading can be lonely sometimes. So you need at least also even not only even being lonely, but you need even some time to enjoy the fruits of your labor. Whatever you're working hard towards, you need to get some time and also be able to enjoy that. So in today's series, that is the series that we have been doing, the trading psychology. I'm going to talk about a very intriguing topic, that is a mindset of a markets. Okay, and this is basically what we'll be looking at is how to build a trading. How to build a trader's mindset from scratch, right? So my name is Timothy Carrier. You are a research and market analyst. So stay tuned until the end, and I believe you'll be able to get some very key insights that will be able to help you to improve your trading. So let's begin by defining traders' mindset. So in the previous video or in the previous episode that I did with one Robert Van Eden from South Africa, we really demystified traders' mindset, because we were looking at the six-figure trader, and we were looking at some of the behaviors of the six-figure trader, and we saw how mindset really plays a very key role in this. So when you talk about a trader's mindset, basically what you're talking about is the mental framework, right, that you bring to every chart. So when you look at the charts, the mental framework, whatever lingers into your mind mentally, that is what you're calling a trader's mindset. And a trader's mindset is basically focused on discipline and not emotions. All it should be basically focused on emotion. I mean, on discipline and not emotion. Again, it should be rooted in long-term thinking and not instant gratification, because we have seen most of the time people come into trading, they expect to make very quick money within a short duration of time. But instead, what happens is that they end up losing a lot of money within that shortest duration of time. So you have to think long term. You have to remain disciplined without any emotions for you to be able to prosper or to have longevity or success in the financial market. And the reason why, you understand now, when you talk about traders mindset, we can have basically like two types of traders mindset. That is the fixed mindset and the growth mindset. So a fixed mindset is maybe probably when you find yourself maybe saying that I am just bad at trading, right? Or maybe probably I cannot be able to hack trading. That is a fixed mindset. A growth mindset is whereby you have, for instance, an example whereby you can say that I can improve through study and feedback. That is, you take the losses as a feedback, or you take the losses as data to be able to gather feedback while you are making losses, and therefore you're able to improve using that particular data. So a growth mindset is what really is needed for a trader, because for you to be a successful trader, then a growth mindset is very paramount, because a growth mindset is equals to resilient, adaptability, being disciplined, etc., etc. And these are the key characteristics of successful traders, or what we talked about in the our last episode, the traits of a six-figure trader: discipline, resilient, adaptability. So resilience, right? Very important. When you make probably losses, how are you coping with those losses? Are you able to accept the losses and move on, right? So then a trader's mindset basically is based or formed through what we call the self-talk and beliefs. So self-talks and beliefs is basically like what you say to yourself when you're trading, right? Remember, when there is this thing that says whatever you say to yourself shapes your results. So when you're trading, or even in this field of trading, so if you don't say positive things to yourself, what really would happen is that you might not have a positive results. Remember, it's garbage in, garbage out. So if you have a positive self-talk, if you believe in yourself that you can be able to do this, then higher chances that you will emerge successful. You'll find yourself hacking the way out, turning from a losing trader and being going all the way to being a successful trader. So you realize some of the negative talks people mention is that maybe probably I always mess up, right? So I always maybe probably hit stop loss. So those are negative talks, okay? So you can translate those into positive talks. Like for instance, I am learning from this loss. Okay, so when you take a stop loss, you tell yourself that you are learning from this particular stop loss. All right, you are learning from that particular loss. So you're able to analyze the loss. You're able to understand why the trade was a losing trade, and from there you're able to gather feedback that will help you improve in the next trade. So it is always important to reframe from a negative self-talk and transition into growth statements, right? I remember there is a video I also did about affirmation. So you need to be at a point whereby you give yourself a positive affirmation that you can be able to do this. You can do it, right? If others can do, then you also can be able to do it. Then we talk about visualization techniques, very important. That is you visualize a calm execution before market opens. You see yourself following your trading plan and not reacting from every trade that you take. The mental rehearsal. This is more of a mental rehearsal. And what it does is that it helps sharpen your focus and also increase your confidence. So when you talk about a trader's mindset, again, you realize that emotional intelligence is very important. And emotional intelligence, basically what they call EQ, that is being aware of and managing your emotions, especially in trading. So you should have the emotional intelligence. That is in trading. That means you being aware of and being able to manage your emotions. So you need first of all be aware of your emotions, your psychological traits or traps, and then now how to manage those emotions. You need to come up with a way to be able to manage the emotion. So if you are greedy, you need to come up with a way to be able to manage greed. If you are fearful, you need to come up with a way to be able to manage fear, right? So also there is high emotional intelligence, and if you have a high emotional intelligence, this is maybe probably you taking more control of your trading. All right, so you being in a position that you're able to take more control of your trading. So it's always good to practice responding to the market outcome rather than reacting to the market outcome. Okay, all probably if you're analyzing the market, practice responding to what the chart is telling you and not reacting from the same. Then it is also important to be able to overcome the limiting beliefs, because at some point we have been able to see that probably you might realize that the issue is not all about yourself. Okay, the issue might not be about maybe probably you not understanding the technicals. Sometimes you might be having some limiting beliefs. Okay, like probably I need to win every trade, I can't succeed without indicators. These are beliefs that you need to overcome. So you need to replace these beliefs because they are limiting beliefs. You say that I need to win every trade. That is a very big mistake, a limiting belief, because you realize, irrespective of your experience in the financial markets, you might not be able to win all trades. All right. There are some trades that you still take losses. So if you believe that you need to win every trade and then you take a loss, then what happens is that you end up being demotivated. You end up being damaged psychologically. Okay, so others say that they maybe probably a statement like I can't succeed without indicators. All right, so we have seen people doing well without indicators. Myself, I don't do indicators, but I don't rule them out. It's a point to begin from, and as you mature in the financial markets, as you gain more experience, you realize that price action is really quite significant compared to indicators. So those people trade price action. They are able to get a really high quality trade setups compared to those who are trading indicators. Remember, an indicator is basically formed or designed to follow what the price is doing. So they are lagging span. So by the time an indicator is giving you the entry signal, a person who is trading pure price action will have seen that trade setup and will have taken that particular trade. So it's good to replace these limiting beliefs. All right. Maybe you have like I trade my age and not my ego. I follow my plan. Such kind of things. And then it's also great or important for you to create what we call mental resilience. All right. So mental resilience, what does that mean? Is how you react after maybe probably a particular outcome. Let's say maybe probably losses. Okay, because you need to be able to know how to bounce back from losses with reflection and not regret. Okay, not attaching. You should not attach yourselves to your trading outcomes. So the moment you take a loss, how do you bounce back without regretting? Okay, because regret will never help in the financial market, but reflection will be very important. You'll want to reflect why you lost on that particular trade, and reflecting will lead you now to acquiring the feedback that you need so that you can be able to improve in the next trade. So how to create mental resilience is to keep perspective, right? To keep perspective. What do I mean by keeping perspective? I mean one trade at a time. And we usually say that one trade is equals to your identity. So taking one trade at a time, taking one trade at a time, it will really help you in terms of being able to create a mental resilience. Okay, so then there is the power of reflection and feedback, right? So like you realize every week, what I do every week, especially on Saturdays, I end my week with honest review, with not really honest, with honest reviews. That is because I've been journaling my trades, right? So I have to review, because again, you cannot review if you're not journaling. So I go to my journal, I review my journal, and I need to be very honest, all right? And honesty here doesn't come only on reviewing, but it also comes when you're writing this particular journal. You have to be very honest with yourself, because you're not just capturing maybe the entry points, the exit points, how much you made, but also you are capturing the psychological traits. How are you feeling when that trade was running? Okay, were you fearful? Were you greedy? Did you want to close the trade at some point? That is very important thing to capture, because it will help you also identify your psychological traits. Okay, so you need to end each week with honest review, and that's what I mostly do on Saturdays, or maybe probably on Sundays. I have to sit down and review, and I have to be honest with myself, because again, if you're not honest with yourself, then even renewing is of not reviewing that particular week, or reviewing that particular journal will not be of essence. So when you're doing this, then it's always important to ask yourself some questions. Like, for instance, what did I learn in this particular week? Where did emotion show up? All right. How did I behave when the market, maybe probably when I took a loss? So these kind of question will help you being in a point that you can be able to reflect. And the moment you're reflecting, or the moment you're asking yourself these questions, then you are getting answers to these questions. And this is the feedback that now we are talking about. And once you have this feedback, remember the power of feedback. What feedback does in trading, it fuels growth, right? It fuels growth. So with this feedback, you're able to take action that will help fuel your growth, that will see you move from point A to point B. That means there will be an improvement. Okay. So then again, what is really important is a daily mindset routine. And here I'm going to give you an example of what I do. So I've shared this time and again. In the morning when I wake up, the first thing I do is, of course, prayers. Okay, so I make my personal prayers. I can do some meditation. Then from there, I review the trades or I look at the charts. Then I need to make also some affirmations. All right, I've talked about affirmations severally. That today, maybe probably an example of an affirmation is that maybe probably today I'm going to be a profitable trader. Today, I'm going to follow my trading plan to the letter. Right. Then now, as you have analyzed the market, what next? You have to wait for your setups. Remember, I've always said there is this common saying that I've always mentioned, that successful traders do a lot of time, spend a lot of time doing nothing. So you have to wait for your setups to materialize. Then now during trading, okay, how do you do? Before you trade, make sure you tick your checklist, basically to help you take only high probability trading setups. And then once you have executed those trades, it's also good to manage those running trades. Like for instance, how I do. For me, I trade gold. My setup for gold is 100 pips. So the moment gold gives me 50 pips in profit, what I do, I usually take a partial profit and put my stop loss at break even. Basically, that is risk management, how to manage those running trades. So then, of course, after the session, once the session is done with trading, what I do is now I journal. All right, I journal my trades, of course, indicating all those things I talked about, the entry points, the take profits, how much I made, and also my emotions, how I reacted when the trades were running. Okay, so what is the essence now of this particular topic? What you need to understand is mindset helps you in terms of driving results more than even strategy, because we are talking about mindset equals to the trading psychology. And trading psychology, it's all about 80% of trading. Okay, it encompasses 80% of trading. So the moment you master your mindset, then this helps drive results actually even more than strategy. So what you need to do is to develop a growth mentality. All right, from now, if you've been suffering these things that I'm talking about, go and start developing a growth mentality. Practice daily to be able to train your mind to be like a pro, to think like a successful trader. Right. So I believe this was quite informative. So make sure you like, subscribe, and if you're committed to mastering your mindset, also make sure to comment, to ask some questions, or to refer or to share even this video to your friends, so that they can be able as well to benefit from the same. Right. So if maybe probably you're building your inner edge, I would also want to know. So comment mind over markets, and I'll be able to respond to you. Any questions that you'll be having, all right, so that I can help you to be able to build your mind over markets. All right. So until the next episode, take care and have a wonderful time.